Hi guys, today is the 7th of September. This is our weekend preview slash review or whatever, what's happening in the markets and what's probably about to happen during the next week. And let's start with the current macro theme. Maybe I will sound a bit like a broken record here, but I was talking continuously that this current rally has overstayed its welcome. And I came to an interesting conclusion that it's way easier to be right in the market because with basic understandings of economics and some common sense, it's quite easy to come to a conclusion about what to expect. But the timing is crucial, and the timing makes all the difference. And due to the complexity of the systems we are trying to discuss here, it's extremely hard to time your positioning properly. So that's what makes it not only a science but an art. And finally, we're seeing something definitive here. Some of the data was mixed. I'm sorry, wrong week. Here we go. Namely, ISM in manufacturing was a bit worse. JOLTS job opening were a bit worse too, but no big deal. ISM services PMI was even better, so the manufacturing statistics was mixed, as most of the macro releases were in the previous week. Mixed and no definitive message. But what happened is extremely bad non-farm payrolls report, which basically tells us that hiring in the economy has was reduced significantly. I don't know, the word stopped is not maybe not the right one, but reduction from the forecast of 75k and the prior reading of 79k to 22k is quite significant. That's a sure thing. And that makes this whole situation a bit more obvious now. Many were talking that the tariffs will influence the economy, that the chance of a recession is quite high here. And now this reading about non-farm payrolls sort of came out of the war, the fog of war, so to speak, because I really started calling all these mixed data releases as the fog of war, of an economic war which is taking place right now. And this is an obvious result here. Now, let's take a look into the next week. Here we will see a barrage of inflation data, and I think that today we should also we should also take a look at non-farm payrolls annual revision, because there could be surprises there also. And Michigan consumer sentiment will be important too, because we saw actual improvement of consumer sentiment, and that was one of the driving forces of this current rally. But today it is also important to peek even further, and here we see that there will be a Fed interest rate decision on Wednesday, the September the 17th, and this could be, and very much likely will be, the catalyst here. So yeah, this is a very important juncture for this market. And with that being said, let's start looking at charts. First of all, the main indices. As you can see, this release was it has created definitive sign of indecision here. And if we look intraday, we will see that actually market has sort of recovered its initial losses, but the recovery was not definitive, and it ended up in a neutral position. That's M and Q. You can also see the same situation in M2K, which is Russell, which is mid caps and small caps, and the gold is strong, while oil is weak. So, in my opinion, this is a clear situation that the market is pricing in a rate cut, but at the same time, it is preparing itself for a recession. And key levels to watch in CL are 61. This formation, will it follow through to the downside? We will see, and this will be a confirmation of the bearish bias which I have and which is quite pronounced. MGC gold futures obviously tells us that the market is expecting a rate cut and a pick up in inflation here. I should also remind you that it is quite common for the market to have a correction once the Federal Reserve starts actually cutting the rates. It's one of those situations where the obvious thing actually leads to the contradictory outcome in the markets. Obvious thing is, hey, cheap money. Why? Let's go. Let's buy all the stocks and see how they grow. But actually, the market most likely will price in recession first, and then it will start pricing in another cycle of rate cutting here. And also, you should keep in mind that persistent inflation is a nasty thing, and it messes up market quite a bit, makes trading and investing a bit more difficult. So we'll see. There was a change in rhetorics from Federal Reserve, and it's a very important thing for the market and actually for the world in the coming decades, because they before that they were very eager to fight inflation, and during the previous week or a week before, Jerome Powell has actually changed his stance, and now they are making the labor market a priority, and persistent inflation is the killer of status quo. It disrupts everything. It disrupts not only trading and investing, it also disrupts the very social fabric of countries. And so yeah, this for some reason my camera does not show any picture here, so I will disable it. And yeah, so this is a very important moment, and let's take a look very cautiously at what's about to happen. When we speak about actual trading opportunities, I think that obviously shorting indexes could be a good one, but we need more time for it to properly set up. For example, I have this setup in which I call the MA catch-up. The main idea here is that the 50-day moving average is very important for institutional owners, and if something fails to rally when the 50-day moving average is approaching it, it usually means that there is no institutional interest. And here in NQ, we see that it did find some support. and it tried to move higher and even regained this upward trending channel, the lower boundary of it, but we saw distribution here, and that's why it's sort of in the middle of it and indecisive. So this MA catch up, you can actually see it in Ethereum as well. You see that MA is catching up, and I'm actually, this is one of those funny situations where there is an idea, but you really don't know is it long or short. Because if you take a look here, this is a clear, well, maybe not so clear, but close to it, even if we will be more liberal with the start of the move. It's 100% move in Ethereum. So that makes it qualify for a high tide flag formation situation in high growth names, in stocks or in coin or whatever is moving, and we could trade it. But at the same time, we see this MA catch up, and you can see how it works here. Here is a failed MA 50 day MA catch up situation. It only managed to produce this downward move of 12 to 15%, and that was it. But this is enough to make good money, actually, if you have executed it properly. And sometimes it marks more pronounced change of trends here. And another example of 50-day MA catch-up could be Bitcoin. So this could be the theme in the indices, catching up with the 50-day MA and failing to rally off it. What's really important to know about the market of the states now is that it is definitely changing its global positioning, but at the same time, it will stay the most liquid market, and the whole system of the states will stay as the most comfortable, the most accommodative for innovation in the decades to come, despite all the political stuff and despite the ongoing transformation from a global superpower to a regional superpower. And one of the few, I think, in stocks, one of the best approaches here is to seek out the themes which are unique to the states, and you have access to them because it will be public more or less. Maybe in the coming decades less, progressively less, because private equity is still on the rise. At least that is my perception. So there will be less publicly traded opportunities, but still the states will be the best if you want to be exposed to the next spike in innovation. And a good example of a name like that, which could be properly traded here, is CRDO, CRDO, Tech Technology Group here. One of the best finds, actually, in this cycle. And what they do is they produce smart cords. I'm not that techy and not that curious, unfortunately, to get into details of that. But it's a crucial element of the data center infrastructure. And I don't remember exactly when I did point that one out. Maybe it was here. I think it was June or July. That was quite a run. Why? Because their solutions are very important for the AI data centers. Just as producers of airline infrastructure or airline supply back in the 60s were on the rise. These kind of companies, these growth stocks, thematic stocks, are the way to go. But in order to trade them properly, you need a correction every once in a while. And this will be the most productive way to trade American markets in the coming years and decades. So actually, I'm quite welcoming of this correction. This will not be the end of it, although there will be some pain in the process before this global repositioning of the states. What's encouraging here is that mm, they have made an agreement with the European Union, and that could be an encouraging sign. So maybe there will not be a direct transition to a regional superpower, but more of a formation of blocks. And one obviously is a China-led one, and the second one is a US-led one, with Europe with it. And it is true for politics, for economics, for defense, and so on. So uh, that should tell you that, in my opinion, at least in my perception, that this will not be a depression. A recession, quite likely, but the new configuration does not mean that the world will become totally fragmented. It will most likely it will transition to blocks again, as it did in the second half of the 20th century. With that being said, you still can find interesting situations in this market, but I should say in the market, in such a large market as the market of the States is, always something always will be growing. And here we see that Reddit is still good. Looks really good, and actually setting up for a breakout to the all-time high from its IPO base, which is good. IPO bases are one of the best situations in the market. And to others which sort of are standing out in this market are Vulcan Materials and Martin Marietta. And these provides building materials, which is totally okay with the current topic of reshoring and rebuilding, and which is true for the states. I mean, reshoring of production and rebuilding of infrastructure. So, and these two could actually be framed as a defensive play. But if the market is about to correct, obviously expect lots of volatility in these orderly charts, because in a correction, in a bear market, everything which is orderly becomes unorderly, and that's simply the result of liquidations. When a hedge fund liquidates its positions, it liquidates not only the quote unquote bad ones, but good ones too. So that's why volatility is the name of the game in the markets, which is probably about to reveal itself in the coming weeks. So the way to how I expect the primary scenario for me is that we will see sort of back and forth in the coming week, and the Federal Reserve will be the catalyst of the downside movement here. Once again, I lean heavily to short-term trading in this season, and it's quite it's this endeavor of making predictions is quite fruitless, but still this seems quite likely to me. I mean, what really Federal Reserve, which will be the main newsmaker and the catalyst for the market, what really can they do, or Donald Trump, in these current situations to make the market feel strong again? They are literally out of options because the Federal Reserve can cut, and that will mean that they are afraid of recession, and they are preparing the economy to it. They can avoid cutting the rates, and they will upset the market, which expects cheaper money. And when it comes to political administration, in terms of new trade configuration, I think they did what they were able to do, and in the light of recent publications in social media of Donald Trump, it's quite unlikely that the tariff deal with China will be in during the coming weeks or so. But that could be another surprise. But even with that situation, I think the market needs to reprice at this point. It really wants to do so. And so, yeah. You could, and I will be playing this situation obviously through futures. Mostly, I aim to do so. And I will be looking at M and Q. These are my primary names. Maybe, which maybe it's time to short some strength in Russell in the coming week. We'll see, because it's near the all-time highs. Same true for MNQ here, or NQ. And with gold, it's a bit more difficult because this was the good moment to get in. And if the gold is about to rally, which is quite likely in this inflationary environment, which is inevitable in the current macro and regulatory configuration, gold could be buyable on pullbacks. With the coin, it's a bit more difficult for me because there is a blend of risk on, risk off influence here, and that's why Ethereum looks quite weak now, and maybe is about to transition to this 50-day MA situation, which I have mentioned before. And what's problematic for Bitcoin is that there are too many big players there, but so less alpha. But that could change if repricing is really about to happen, and the quest to find assets where you could park your money to prevent it from being devalued by inflation could sort of discount the success of large institutional players in this field. And also, one could look, I don't have many of them here, but one could look into former growth stories here, and maybe to look some companies at the end of their run, such as CRDO, which we discussed later, and other AI related names, maybe even big ones like NVDA. This one could be safer to short, and you can see that this one is quite weak already, and maybe it is foreshadowing and telling us what's about to happen in this market. Okay, so be careful, and let's be in touch.